Strategy tip. Difficulty 8 out of 10. Probability high 60% to 80%. A lower high on our side indicates that strength and momentum is being lost. Look for a lower high on our side. 2. A histogram tick down is confluent reason number 2 to enter a trade. 3. Level 2 price action in order book will be confluent reason number 3 to enter a trade once price action dictates heavy sell pressure. So what does this strategy say, guys? Okay, what it says is, and you can use this on any time frame, right? But the difficulty on a 1 minute time frame is extremely high. I would say it's more so rated for advanced traders. And I took this trade that you guys are going to see in a few seconds for a quick 1% scalp. And keep in mind, that's my strategy, right? My strategy involves taking these 1% scalps and doing it many times a day. It could be 3% sometimes, and they can add up to 10 to 15 to 20 to 30% gains a day, as you guys know from my strategy. So I've been trying to share a lot more of this with the general public. So take a look at this video, and this is what I basically did. All right, I noticed that the 5 minute RSI was incredibly high at 82. And then I noticed that the 3 minute was very high as well, but I was actually trading it on the 1 minute chart. What we first of all noticed on EOS here is that there was a symmetric triangle that was just itching to break out. And as it was itching to break out of there, it was most likely going to form a high. And unfortunately, I missed it, but I was asleep and my RSI peaked over there. So I got a little warning, woke up, saw it on the 1 minute chart here, a little bit too high. And this is the bearish divergence that gave it away for me right here. Okay. As soon as this peak formed, the next candle, right, the next candle with the downwards histogram tick that closed for me gave us an even lower high right there. And that's what rule number 2 says. Look for a lower high on the RSI. And as soon as that happened, I entered my short position, and you guys can take a look at the rest. So before we do that, I want you guys to just take a look at this 40-second trade of mine, because I think that it's very important to put theory into practice. And if you guys put your theory into practice over time, you'll no doubt improve your trading skills. So take a look at this 45-second video, and then we'll get into the Bitcoin tactical analysis for June the 7th on a Thursday. All right, guys, this was one of the fastest trades I've ever made for this kind of profit, okay? This was a 7-minute trade. 7-minute trade for a $700 profit. And the reason why I entered into this short position is simple. The RSI was simply too high on EOS. I've been waiting all day for it to break out of this right here, EOS, okay, all day for it to break out. I completely missed it. So whenever you miss an uptrend, what you want to do is you want to short the top, guys. Short the top when you miss it. So on the 1-minute chart, it was bearishly diverging right here. So I literally shorted it for a 1% scalp for a $700 gain, as you guys see. So as you guys can see, that strategy worked out very well. And I know that you guys are probably thinking, okay, this guy's playing a $70,000 position, right? But keep in mind that the scalping strategy is directly proportional, right? So if you're playing a smaller amount, the gains are actually the same. So you could easily get up to 10 to 15% of whatever capital you're playing with. So it's definitely one of my favorite ways to play because I like to get in and out of trades very quickly, and my channel is dedicated to is more so geared towards trading, right? So I want to improve your guys' trading as well. And yeah, like I don't know, just lately I've just been I've been trying my best to reply to a lot of people. So I apologize if there's been a lack of delay, okay? So it's just been incredibly busy lately. And I've just been very overwhelmed after putting out the Udemy package, and I'm trying to think of more content for you guys as well. And believe it or not, like I spend a lot of time replying to you guys. I apologize if it's not on Udemy, but on Twitter, I'm getting bombed with a few thousand messages a day, and on YouTube as well. I'm trying to make my rounds to all the comments. So once again, I want to apologize to everybody for not getting to everybody. But though lately, just please do know that the goal ultimately is still to improve you guys as a trader, and that's what I want to see. I want to see an army of baby whales that can trade as well. So let's get into the Bitcoin tactical analysis. All right, we're going to keep it fairly short and sweet and to the point. So first of all, let's look on this right here. So what we were talking about on this death cross before, and let's talk about the death cross for the people that don't know what it is. There's a 200 moving average, and then there's a 50 moving average, okay? This one is the 50, or we'll say this one's the 200, and we'll say this one right here is the 50, okay? So just to give you guys some basic terminology and talk about some strategy. So a golden crossover is where the 200 moving average ends up crossing below to support the 50 moving average. That's a golden crossover. It's a good thing because on a long time frame, right, it indicates that the 200 moving average is now being a very good support over a 200 sample. But a death cross is the opposite way around, okay? A death cross is the opposite way around, where it actually ends up reversing like this now. Okay, all right? So now the 200 ends up being on top and the 50 on the bottom. So what we see here is a death cross come down, and then the bulls made an attempt to golden crossover again right there because the 200 ended up looking like that. And then we got a death cross again coming down. Yeah, so it's kind of scary right now. I want to make note of something that has a high probability of happening though. The high probability, so what we want to do as a trader is focus on high probability setups. Agreed? Okay, we focus on these high probability setups because combined with good risk to reward setups and good money management in general, and of course if you have a high win expectancy rate as well, there's a really good chance that there's no doubt that you'll find much more success in terms of profit wise, right? So what we've got to acknowledge is this really long trend line support that's been established all the way since November here, right? I'd say it's been established for a pretty long time now. So then if we just keep looking at it, it's been established since about November there. So let's just keep extending it, and then we'll draw this in here as well, something like that, okay? So is that possible that this could make something like that? Just a double touch, triple, okay? So if you guys noticed every single time where we hit from here on, here's single point, but here, for us to bounce with conviction, we actually needed to test this trend line to make it relevant a few times, right? I think that's what we would have to say. So then now, what we're saying is, what we've got to say to ourselves is, okay, trendline analysis can be very arbitrary, right? So if I were to draw it like that, I would have considered some of these regions right here. It's hard to see, but the regions that fall into between these two parallel lines right there, right? They're going to be regions that bounce heavily off of a support. So am I to consider something like this where we have already bounced into this region a few times and now we're bouncing off of it? Or am I to consider it from wick to wick ends like that? Okay. So I just have to make note of that distinction of how we subjectively choose our trend lines, right? That is probably the best that we can do if we're trying to touch the tip of this point right there and including this point as well. So that's probably the best. Now, some analysts are saying that, all right, well, if that is the best way we can do it, and if there's a few touches like a triple touch here, then there's most likely going to be another touch down here. So what I'm saying is, guys, don't be surprised if we get another touch down to over here. In fact, if we do get a touch down to here, that'd be the most fabulous thing ever. Because realistically, this will end up right in the golden ratio zone, right? Around 72 to 73.21, which I'd be more than happy to buy. In fact, right now, I'm not buying into any position for Bitcoin, right? Until we break some key regions right now. This was very obvious it was going to break. It made a leading first, right? It made a leading first wave diagonal. And yeah, something like that. Really nasty. And then that ended up just falling down really hard. Leading first wave diagonals, let me show you guys the mechanics of them very quickly for those that don't know. A leading first wave diagonal is usually found in the first wave or the A wave of a structure for Elliott. And it can go something like this, where the first wave can often be the longest. The fourth wave can overlap wave 1 territory as well. So remember those rules, where wave 3 is often the longest in this leading first wave diagonal. Wave 3 is often longer than wave 5, but shorter than wave 1. And then wave 4 can often overlap as well into wave 1 territory. And when that happens, it usually ends up breaking to the downside, right? That's usually what happens. And a lot of people say, like, just as an example, like, I don't usually agree with it, but this is usually what they say. Just trying to find the profit box here. They say that whatever distance this moved, this will generally move the same distance as well. This almost happened, but most of the time it's just coincidental. So they're using it as a base range in there. I don't really like to do it that way. What I like to do is I like to take the base range of the wedge where it first forms, where it first makes contact, right? And then I drag it over as a target. And then it becomes a more realistic target, just like that right there. So what are we to expect now, guys? Okay. So what are we to expect now? We know a possible scenario and a really good buy zone, guys. Okay. This is a really good buy zone, honestly. If it falls into this territory, great buy zone if it happens to break out. But this is where we currently stand with Bitcoin. Let me show you guys. And I don't know if you guys have noticed it yet, but it's looking very bullish for now. All right. So that's how it's kind of looking right now, an ascending triangle, right? You guys would agree with me that it's looking like an ascending triangle right now, no matter how you draw it. If I were to draw it on the many different time frames, like let's see on a daily how it looks actually, okay? If we look at it on a daily, that looks like a very clear support, right? With wicks just breaking it a little bit. So if I were to draw it like that, that would be acceptable as well. Because if you look on a daily, right, those candles just overlap. Or I can perhaps draw it like this. But the point is, we're getting a series of a higher low. And that's the important thing to make note of, a higher low. So when you're getting a series of a higher low and you're getting the same points on a high right here, you got to ask yourselves, how many times can this particular resistance right there hold until the bulls push it up, right? Don't get me wrong though, this could possibly fail. Elliott wave is a jumbo of a mess right now, all right? It's a mess, and I'm going to show you guys the complication with Elliott wave right now, all right? So we're going to consider this a leveraged market. And in highly leveraged markets, wicks can actually overlap, all right? They can definitely overlap. So if I actually were to draw my Elliott wave count, right? Let's say that was 1 right there, okay? Truncated, 2, 3, 4, 5. Okay, well, that's overlapped. Now let's see how it looks on a daily chart, okay? On a daily chart, we only see wave 1 territory ending roughly there and in wave 4 just like that. So could this possibly be the 5 waves that go up, right? So if you take a look at it once again, these are where the overlapped regions are, right? So technically, it would make sense to call it like this because it is a leveraged market. So that would technically make a double top there for the 5th wave position. So if this were true, and this case were actually possible right here, you guys got to take into account the Fibonacci target, right? Say the Fib target would be roughly around um, right there between say 73 to 7400. That'd be a very reasonable target to enter a trade. So if it doesn't break out of here, I'm not too worried at all. Okay, I'm really not too worried, but because then this could validate the bearish count. Unfortunately, the bearish count has 5 subwaves completed, but that's a really ugly way to count it, and I'm not really the biggest fan of it either. Okay, but if I were to count, for example, this here, 5 subways is 1, 2, 3, 4, 5. Like this could be A, B, C like that as well, right? But it's more likely to be counted as 5 waves like this is right here, okay? So it leads me to wonder, where the heck are the rest of the corrective waves? Is this a corrective wave or is this an impulse wave? So Elliott wave right now is not really helping me too much because I'm not really getting the best particular count. But what I am seeing instead is it's hammering at this particular region, right? It's hammering at the 77, like right around here, I'd say around the 7750 to 7800 range. If we can break out of there with so here's the plan, guys, right? You miss the uptrend, you don't want to take the risk now, right? Or you do take the risk, right? When it breaks out, you end up taking the risk and going long, just like this, and then you target a reasonable place, okay? Just using the same type of, angle, pretty much just trajectory wise, you can clearly see that, like, it's not like this one's gonna go straight up, right? It's not like it's gonna go straight up from here like that, because the other ones commonly didn't, right? So we might even see a more slope line like that, right? So even more slope as this one gets, just here's what I'm talking about, right? It gets steeper and steeper. Like as you go to the left, this one's steep going up. This one's not as steep, not as steep, not as steep. So this one would probably curve down a tiny bit as well, just to extrapolate some of that information, right? So here's the plan. Do you go into a long position right now as it breaks out, right? Let's say you ended up breaking up above here. All right, let's say you ended up getting into position right here, guys. Um, Coordinates. You ended up getting at 77. Let's say you entered at 77.80, okay? That's the breakout price roughly right there is 77.80, okay? And let's say you entered a 1,000, let's just say you entered 2 Bitcoin at 77.80, right? So now you're in a 2 Bitcoin position. You're in a 2 Bitcoin position. Oh, sorry, a 2 Bitcoin position for average price 77.80 for a $15,000 position, just as an example. Your target 2 will actually be over here, guys, right? Your target 2 will legit be like around $8,700. Let's go for a conservative approach first, right? Let's conservative approach. Yeah, let's go for like 8,700, and then a more conservative one like 8,250. So your stop loss is going to be around 7,600 right here. That's a pretty good stop loss, 7,600, right? So now let's input some of these numbers. 7780, that's going to be around 8,700, because that's where you're roughly going to be targeting it, right? Actually, 80, we got to go with 86. That one's a little bit too high for my liking. 86 for my liking. So this is what I plan to do. I need to be very clear as well that I'm not giving any type of financial advice, guys, right? I'm not giving any financial advice. I just want to be very clear about that in case something happens one day. I'm just talking about it from the perspective of what I am going to do only, okay? And then my stop loss about 7,600. Since we broke it, that's where I'm gonna probably end up adding some to my position, right? So that's one way to play a breakout, right? Another way that people play is they wait for a clear break, okay? Wherever it may be, they'll wait for a clear break above 7750 to 7800 range. Okay, they wait for a break, and then they wait for it to retrace down, and then they play the breakout once a confirmation is confirmed. The breakout right here. So they wait for a high to form, and then they wait for it to retrace down to make a low, and then they wait for it to break out past the previous high, which will now confirm an uptrend to be extremely safe, right? That's one way to play as well. So let's say you only added 25 of your position right there, and you wanted to add more on a breakout, let's say above 8K, okay? So now you bought some more at $8,000. You bought another 2 Bitcoin. So now your average price is 78.90. Okay, 78.90. You're in a 4 Bitcoin position with the exact same targets pretty much. But now your base price has changed to 78.90. And now your stop loss can actually be slightly adjusted as well, right? So perhaps you can put it exactly at 77.50 or something now. You can make it to, because you're buying on strength, you might even want to add, like, change it to 77.50, right? Something like that. So now 77.50, you're raising your stop loss, and you're now in yourself in a $31,000 position, or I'm now in a $31,000 position with a risk to reward of 5.07. So what I'm finding, guys, or what you guys need to also realize is that it's all about just managing your numbers, honestly. Like, I find that it's all about managing your numbers and playing around with your risk to reward and planning, if this happens, then that happens kind of statements, if and only if statements, right? where something can only happen if certain conditions and criteria are actually met already. And that's what I find trading is all about. So guys, if it breaks above, this is what I plan to do between 7750 and 7700. If it breaks above there, I'm definitely going to add about 25% to my position, like how I mentioned. And then, or sorry, about 50. Yeah, probably 25 actually, not 50. And then I'll add way more to my position on strength after a high has formed, a low has formed, and then after that, it breaks past that high on the previous one during the interim. That's on the upside if we break up above 7750 to 7800 range with a lot of volume. The volume needs to pick up. But as it stands right now, guys, it doesn't look like there's a lot of volume, okay? I just want you guys to know it's actually looking a lot more bearish right now than bullish. If we look on the daily, for example, it shows some rejection. On the 4 hour, it shows the most rejection right here with a lot of candles that are indecision candles, and they're not even inside bar candles, right? They're getting lower and lower. They're getting stretched in between. So there's a lot of heavy volatility right now. And if we look on this high and that high, it's about the same. But we look on the RSI for strength, we're actually losing strength, right? So yeah, on the 3 hour chart, this could have been very well just an ABC correction. ABC correction. Because if this made the 1, 2, 3, 4, 5, and then this made the ABC going up, there could be very well another correction coming down, like I talked about, right? Where we could make the ABC coming down to perhaps one of those regions over there. And if I use Fibonacci extension right here, Fib extension ends up giving me a one-to-one target pretty much right around 73 to 7400. So that's on the bear side. How are we going to confirm that we might have a short-term bear trend first? Well, guys, just keep your eye on here, okay? Just draw out your symmetric triangles the best that you possibly can and just see which way this is going to break, right? If we end up breaking down or up, that would be a very good indication. Now, I know that there's not that many relevant points, but it's been over the past few days, right? So it's got to be relevant enough for short term. We're talking about for over 10 days already. So it's fairly relevant. That's formed as well. And this major yellow one, which I'm going to make red for you guys, this is the one that you got to really watch out for, okay? This is the longer term one. And the best place that I plan to buy is anywhere between 73 to 7400. If that happens, fantastic. So think of it like a launch pad. Okay, think of it like a launch pad where something that goes up, right? What needs to happen, it needs to come back down and it needs to use it like as a trampoline to propel itself back up even higher, right? So you just keep jumping on this trampoline, right? But you get higher and higher, like if that kind of makes sense. So think of like if it goes down to this particular range, it's actually a really good thing because then it's going to use it as a launch pad. It'll confirm that we've used this red line as a very hard support and it's actually holding, and then we'll get that chance to propel ourselves to 8600 or something like that up there. So right now as it stands, I see more bearish signs than bullish signs. Just want to be very, very clear about that, okay guys? Way more bearish signs right now. Price action, this is dictating a lot of rejection to the upside. We have major resistances right here at 7750 to 7800 range. If it breaks out of there, I'll be adding 25% of my position on a break above about 7780, and I'll be targeting about up to 8700. If we break there, that's a big if, okay? And then I'm going to wait for the first high, wait for a low, and then wait for a break above that high for me to add more to my position to confirm a greater degree uptrend. Now, from the perspective of moving average analysis, we're definitely golden crossed on a daily. I mean, death cross, sorry. We're way below still death crossed on the 4 hour chart. On the 3 hour chart, same thing. 2 hour chart, same thing. The 1 hour chart and under is the only time frame where we're actually trending above the where we're trending. We're starting to get bearish on the low time frame, but we're still bullish on the higher time frame. If that makes sense, right? Because of the higher time frames, we're still above, or sorry, on the low time frames, we are still bullish. On the higher time frames, we are still bearish. Okay, because you have to think of moving averages until this moving average catches up. We have to think of moving averages as an elastic band. Okay, think of it like that. It's an elastic band. If it moves too far up, it ends up snapping back down, right? If it moves too far down, it snaps back up. So think of the yellow line as a really good one as well to gauge. So, or even the white one, right? It goes up, snaps back down. Or the yellow one here goes up, snaps back to the yellow, goes up, snaps back, goes up, snaps back, goes down, snaps back. So use these moving averages as kind of like a gauge of where it could go. And what we're seeing right now in this box that I'm highlighting is something that's going to happen in here. This 200 moving average is starting to sandwich all of them in between, right? So now it's a matter of being patient. It's a matter of planning for every single possible scenario. It's a matter of just being diligent and covering all of your tracks, right? If something happens on this particular side, if we break above 77.20, 77.50, 77.80, what do I do? If something breaks to the downside, say it breaks below this symmetric triangle or this ascending triangle, well, where are some of our possible targets, right? And honestly, the possible targets could be anywhere between 73 to 75 when I think about it, because 382 could hold. We never know. We can go sideways for a very long time. We can go sideways till the end of the month. Heck, who knows? But it's just a matter of planning for every single scenario. And then until that happens, guys, we just have to wait very patiently. So I want to thank you guys for joining me for this technical analysis. And the date was, I just didn't even mention it, is Thursday, June the 7th here. If you guys would like to learn how to trade, make sure you guys check out the link below. I'm trying to teach a lot of people how to trade. And I don't know, I just feel like it clicks to me lately, and I've just been having really good success. And what is being successful in crypto as a day trader, right? I mean, you guys see most of my trades, some of my trades, not all of them, but I'm clearly pulling in like a few thousand a day, right? Like some days it's 4 grand, some days it's 5 grand, and like I just want to ultimately teach you guys like what's been working for me. So I really hope that you guys are watching my videos because of that reason, because that's what I want to do. I want to make you guys ultimately a better trader. And I think that if you keep watching my videos, right, or if you keep just learning the material in general, they'll click. Because let's face it, like that $700 profit in the morning, or at the beginning of this video rather, it was a 7 minute trade. Did I tell you guys that? It was literally a 7 minute trade, and yeah, it was awesome for $700, which is what I used to make as an engineer in a week. So sometimes I'm making like a day's wage. Sometimes I'm making literally a month's wage, right, of an engineer in like in a few minutes. So it's kind of cool to be able to trade, and I really hope that you guys are taking this seriously, because if you're not taking it seriously, the guy to your left, the guy to your right, he's the one that's taking it seriously, and he will surpass you, and he will be the guy that's going to take money from your pocket, because this is a very fierce competition. I need you guys to remember that, all right? That you got to put in the hard work. In the morning, I study every single chart that I'm possibly going to trade. At night, I review every single trade and study every single chart again. So, as much as this is a hobby, which it really is, and I'm very addicted to it, it's like playing Dota or World of Warcraft for me back then or something. uh yeah, so you just kind of, it becomes a habit as well, and you love doing what you do. So anyways, have yourselves a great day, guys. Thank you very much for all the love and the support. If you'd like to learn how to trade, check out the link below, and I have surprises for you guys in a few short weeks with more content, with really awesome content, which I'm trying to actually produce with like cool video editing and stuff as well. So have yourselves a good one. Take care, guys. Bye now.